Global financial markets remain volatile today as investors reacted to the escalating conflict in the Middle East, with oil prices swinging sharply and safe haven assets attracting renewed attention. One of the biggest developments came from the oil market. Crude prices moved sharply during trading as fears persisted that the conflict could disrupt supplies moving through the Strait of Hormuz, one of the world's most important oil routes. Brent crude traded above $90 mark during parts of the session, while US benchmark West Texas Intermediate hovered in a similar range. Analysts say traders remain highly sensitive to any signs that a tanker traffic or production infrastructure in the Gulf could be disrupted. Energy markets have been particularly reactive to reports of missile and drone attacks across the Gulf states. Although major oil production facilities have not yet suffered sustained damage, the possibility of further escalation has kept a strong geopolitical risk premium in prices. Insurance costs for tankers operating in the region have also increased, adding additional pressure on global supply chains. The uncertainty surrounding oil has also influenced broader commodity markets. Gold prices climbed during the session as investors turned to safe haven assets amid geopolitical tensions. The precious metals traded higher as concerns about regional instability and energy prices shock drove demand from investors seeking protection from market volatility. At the same time, currency movements also shaped commodity trading. A stronger US dollar limited the extent of global gains as rising dollars makes dollar-denominated commodities more expensive for buyers in other currencies. Equity markets across several regions reflected the cautious mood among investors. Asian markets traded unevenly as investors balanced the risk from rising energy prices against expectation that central banks may maintain supportive monetary policies. Export-oriented companies in Japan and South Korea face pressure due to strong dollar and uncertainty around global trade routes. European markets also experienced mixed trading, with energy companies gaining on the back of higher oil prices while traveling and manufacturing stocks faced losses due to concerns about risk fuel costs and global economic uncertainty. In the United States, investors continued to monitor developments in the Middle East closely. Energy stocks saw gains as oil prices fluctuated, while broader indices moved cautiously as traders assessed the potential impact of higher energy costs on inflation and economic growth. Another important factor shaping market sentiment today was the potential economic impact of a prolonged conflict. Economists warned that sustained disruptions to Gulf energy exports could push inflation higher around the world, complicating the policy decisions of central banks already grappling with slow growth. Shipping companies and insurers are also closely watching developments in the Strait of Hormuz, where increased security risks could lead to higher freight costs and delays in global energy shipping. Despite the volatility, analysts say markets are currently reacting to headlines rather than long-term structural shifts. Much will depend on whether the conflict spreads further across the region or begins to stabilize. For now, investors across global markets remain focused on two key indicators: the stability of oil supply routes in the Gulf and the trajectory of energy prices, both which will play a crucial role in shaping economic conditions in the weeks ahead.